Start off with IBM. Shares up more than 25% over the past 3 months as AI hype has increased the appetite for tech consulting. That, combined with recurring software demand, has Stifel bullish, but the firm's a bit more cautious on the hardware side. Your trade on IBM.
Tyler, I like IBM here. I think that it's traded magnificently this year. You can see that they've gapped up the last 3 quarters and they've beat EPS estimates 3 times in a row. So that bodes to a positive trend here. However, I will tell you that this stock is incredibly extended going into the earnings report. So for that reason, I don't like to make a bullish earnings trade, even though I love the longer term trend. I think that IBM is going to go back up and retest the previous all-time highs, but I would like to buy this on a pullback. I think you would have a much better edge if you got into this stock around 160, 165. to ride it back up to those previous all-time highs. So I'm eyeing for a pullback here post-earnings.
All right, be opportunistic with IBM. Thank you. Let's move on to McCormick. Shares of the spice and sauce maker down 16% in the past year. Jeffrey's noting that while more consumers are turning to private labels, continued at-home cooking is a tailwind. Certainly is in my home. Danielle, you just don't love the taste of McCormick. I love Frank's hot sauce, man. Wow.
You know what I don't like is I don't like the relative weakness. So when you look at the chart and you see what the stock has been doing, especially compared to, you have the NASDAQ making a new all-time high and you have McCormick that's just continuing to trade lower. I also don't like the way that it's reacted to the last couple earnings reports. But I will tell you that it's very inconsistent. Sometimes it's up, sometimes it's down. So with this stock as well, I prefer to wait until after earnings. We're up against a lot of resistance between $70 and $75 a share. So I think that if we get a rally up into that zone, that's going to be a much better place to short it and trade it back down into 60.
All right, let's move on to talk a little bit about some airlines. Finally, American, Southwest, and Alaska all reporting before the bell. Shares of all 3 getting hit over the past year, but Alaska is the underperformer here following that door plug blowout earlier this month. Boeing CEO Dave Calhoun meeting with senators today to address that incident, just a day after United, the only other U.S. airline that flies that airplane, the Boeing MAX 9, projected first quarter losses. Danielle, are the carriers low enough to buy here?
I wouldn't buy these with my money, Tyler. When you look at the longer term trends, they're not good. And, they may get through earnings relatively unscathed, especially because United did manage to gap up post earnings. But when you look at the longer term trends, they're down. And as you mentioned, there's a lot of issues right now with the airliners that are going to continue to impact earnings for the next quarter. So with these stocks, I think they're, at least at minimum a hold. I wouldn't buy them, but I would prefer to look for spots to short them, and especially Boeing. Boeing has rallied directly up into resistance. You have earnings coming up. You're likely to have investors bailing on this stock before earnings. So I think that this one's in a great spot to short it between 215 and 220.